Welcome back, guys, to another episode of Trade Stock. I'm here with Christian Padgett and Nick Knight from the Baldwin Group. They're insurance brokers in the Southeast, I would say, but they cover pretty much the entire landscape industry, or the entire landscape industry. We're going to be talking insurance captives. We're going to be talking about how to make your insurance a profit center for your business, guys. This is going to be a great conversation. So without further ado, Nick, let's start with you. Welcome to the podcast. Nick, give us a little background, and then Christian, we'll come to you next. What's your story, Nick?
Sure. Well, Justin, thanks for having us on. My background, I come from a family of insurance advisors. My dad owned an insurance company. I wanted nothing to do with it. I'll be honest. I was a golf professional. That I wanted to do that my whole life, and I realized that his schedule was pretty darn good the latter years. Anyway, it's come full circle, and Christian and I, we partnered on, we focus in the green industry, and we've had a lot of successes helping business owners, navigate their insurance programs and not fear the big bad insurance guy anymore. We're here to help rather than, sell you a bill of goods and send you on your way.
Yeah. As Tony from my team likes to say, it's promising the dream and delivering the nightmare. That's what we've become accustomed to.
That's good.
So right. I'm glad to have you guys in. And yeah, Christian, what about yourself, man? Where do you come from?
Yeah, my backstory is a little different. All I ever did my entire life was cut grass. So all through high school, I never had call it a real job, right? All my friends working at restaurants, stuff like that. My dad bought me a bunch of landscape equipment. So I had, a full trailer set up, and that's all I did all through high school. That's all I did all through college. And after graduating at the University of Florida, I took an internship with Valley Crest back in the day. Ended up staying on board with Valley Crest through the transition when we merged with Brickman. Stayed on through the Brightview days for about a couple of years. Ended up at a regional firm called ASI Landscape Management, and stayed on board with them for about 7. So had about a decade of professional experience in the landscape industry, everything from production management to operations manager, branch manager, all the way into business development, which is where I finished my career specifically in landscape. And I got the opportunity to come to Baldwin and help lead the green industry practice group, and decided to take all the experience I had during my time within landscape and try to transition it into this side of things and help people from a different angle. So
incredible. So listeners, guys, Trade Stock fans, listen, this is the dynamic duo. This is why I wanted to have these guys on the podcast, because we all see that bill that annual renewal every year of insurance. And we see that on a P&L, and we always kind of skip by it. Like, well, we have insurance. I mean, what are we going to do about it? You got to just pay it. It's kind of like the rent. But with what you guys are doing, Christian and Nick, with having that industry background that Christian has, and then Nick, your insurance background, I mean, just talking to you guys over the last couple of years, we've gotten to know each other. I've been just so impressed with the depth of knowledge, not just within the insurance world, but the landscape application. And that's ultimately why I'm so excited for this conversation today. So let's dive into it. I think I want to go right to the heart of the issue. And guys, we're not going to talk insurance for an hour. Don't worry. We're going to get into other stuff, but I want to go right into the heart of it. I run a $20 million landscape company in California called K&D Landscaping. And, the captive conversation, alternative insurance programs have always been this thing that started happening around 10 million in revenue. But look, even to this day, I'm a little bit unsure of this captive. What is it? How does it look? How does it work? So I would love you guys to kind of walk us through what a captive is, or maybe other alternative insurance programs, and then kind of talk through when or how a company should be looking at those captive opportunities. And Nick, I'll start with you, and then Christian, jump in as we go forward. But let's just dive into I think the conversation and the topic most people are going to want to hear about.
Yeah, I mean, I think gone are the days of a captive. It's for those really, really massive companies that, they've got a bunch of, white collars working in the office and that sort of thing. And, we'll never get to that size, right? It's been kind of that, that's been the perception for many, many years. And, luckily time has caught up, and, there's a number of captives now that are their minimum entry to get into is much more palatable. They start paying dividends much faster than the waiting the 3+ years for that to to accrue and to to cover your initial spend. It's become much more favorable and beneficial for companies. So that's something that Christian and I do a lot. Is we look for those landscape companies that are in the $3 to $5 million range, and rather than just the the typical transactive here's your general liability policy, you take that and hopefully cross your fingers nothing happens, right? We're able to to curb that, and now let this captive, if it makes sense, let this captive help make you some money, right? Because and I'll let Christian kind of dive into it, but what's been so cool is really being able to put that armor on the shoulder for these smaller, I say that with with respect, smaller $3 to $5 million shop. That's, you're doing a great job.
Mostly
You're
market leaders in their small towns.
Exactly. And you're responsible for putting food on the table for a lot of employees, your own family. So we're able to kind of navigate them, and as they grow, the one big thing that that we see day in and day out is business owners, right? I use the term, you're skating with your head down, right? You're working really hard. You're trying to broker deals. You're trying to, make sure that your staff has cohesion. You're doing everything to help grow your company. But the one thing that's lacking is the insurance, right? So, we went from 3 million to X amount of $1 million in, over a couple of years. But the insurance tended to be rinse and repeat. Okay, it went up another 5%, 10%, whatever it may be, but there's no benefit to it, right? And so luckily there's been a few captives that have entered the market in recent years that we deal with one on a quite honestly a daily basis, that they started a captive that focuses solely in the green industry. So they know that landscape owners, you're chasing cash, right? You're trying to get it, and you typically run lean. Gone are the days of big margins, right? So
Yep.
so they understand that, and so they've curated a program which makes the entry a lot easier to get into, and they start paying you back a lot faster too. And Christian, please jump in here, because he's got some good X's and O's on this as well.
Yeah. So the big thing is, I mean, Justin, when you're looking at it, right? Obviously, $20 million company. When you're looking at your P&L, right? You're sitting there with your entire team, right? You're going through it. You guys are talking about where you're at, looking at budgets and stuff like that. 9 out of 10 times, you got payroll, you got insurance, right? Those are usually two of your highest cost items that are going to be sitting there. So when I look at a captive, right? First thing I'm going to ask somebody is, what does your risk tolerance look like, right? Most people, right? You have an entrepreneurial attitude, right? You wouldn't be in this business if you weren't. And quite frankly, you probably have a higher risk tolerance than even most entrepreneurs, because you run a freaking landscape company. So at the end of the day, that's the name of the game, right? So with that in mind, captives kind of fit the mold of who we are as green industry professionals to a T, just even from a mindset standpoint. So when I'm talking to, it doesn't matter the size of the company, but personally, I love what Nick was saying, right? That $3 to $5 million range. That's the time to get what I call captive ready, right? Because at the end of the day, getting into a captive is not something that you jump into. I had an old partner that actually used to use this term in regards to something else, but now I've applied it to captives. It's like getting married, right? It's not that hard to jump into. It's difficult to get out of. You know what I mean?
Yeah.
So when you're going through the process of vetting out a captive, it's important to first and foremost have a broker that you trust, that you've developed a relationship with, that is willing to go to bat for you and has things like risk mitigation services, stuff like that at their disposal to help guide you through that process. So once you start vetting it out, the biggest thing to look at is, are you ready to go into a captive? Because at the end of the day, the name of the game is you are sharing in a pool of the risk. So when you look at the traditional marketplace, right, you're dealing with another term one of my old bosses used to use, chuck in a truck, right? So when you're dealing with some of these small guys, right, uninsured, or maybe they are insured, but there's a gazillion exclusions, and for all intents and purposes, they might as well not be carrying insurance in the first place. At the end of the day, there's a risk pool there, whether or not it's just specifically to California, specifically to Florida, or just the country as a whole. Insurance is based off of class codes. So when you have a high risk industry where people are going to get hurt, people are going to get into accidents, you're sharing that risk on a national level, right? On a global level for that matter. So what happens is that no matter what you're doing, no matter how well you're doing it, no matter how safe your organization is, you're going to see prices continue to go up every year. Doesn't matter, right? Tort reform happens on auto. Guess what? It's still going up, right? They're looking in the rear view. So until you have 5 years of proof that the laws have changed in the favor of a carrier, you're not going to see good impacts on that. So what does a captive do? It removes you from that risk pool, right? So now I have, instead of thousands upon thousands of landscapers across the whole country, some of which, like I said, shouldn't be in business in the first place. Now you have a select group of people that have proven themselves to be safe operating companies, well-oiled machines that have been vetted by the captive itself and its members, and then are essentially accepted. So it's like getting into like this elite group of people, you know what I mean? So once you're in this group, you're going to have meetings regularly with this captive. The captive administrators are going to be involved. Your broker's going to be involved. And immediately that risk pool changes dramatically because you're in a group of what I would say is your peers. They may not be specifically in landscaping, right? The captive Nick was talking about, we do have captives that are solely landscapers. There's also captives where the guy sitting next to you at the meeting might be an electrician. You might have a plumber next to you. That guy owns a restaurant. You know, there's a ton of different captives, all shapes and sizes. But at the end of the day, the one thing you have in common is these people have bet on themselves, and they have a safe operating company that is intended on turning insurance back into a cash flow. And by getting into a captive, the main way you do that is all of the money that you would typically be just paying that's going into underwriting profit, the losses that are set a year in advance before a case is even closed, right? They're setting these losses a year in advance before anything's closed. Yeah, and then you find out a year later that it was half what they said it was going to settle for. When you're in a captive, all of that money that's unused is just earning interest the entire time, right? And on an annual basis, actuarially, they're taking that money and you're getting dividends off of that, right? Depending on the captive, it could be as short as 16 to 18 months. Some captives might be 3 years. But at the end of the day, that money is your money. So whatever's not used is just going to sit there and build and build. So it just turns insurance quite literally into a profit center. It takes a little time to get there, but once you do, you've taken something that did nothing but cost you money every year to where now there's a actual return. And unlike just a deductible, say for like, your work comp, this gets to be very substantial over a period of time. If you have a company that you plan on sticking around and growing over the course of 20 years, 50 years, you can see how that number would just get absolutely massive over the course of that time. So just a completely different way of looking at insurance. And that's why a lot of times I don't even jump straight to the term captive, because depending on how long somebody's been in business, sometimes it's like, that it's like the unicorn in the room. People are weirded out by it. So I like using the term alternative risk structures, right? Let's look at some different things that we can do, because it's not only captives, although captives is by far the most polarizing option in that group of what I would say is alternative risk structure. So
and people may have a distinct familiarity with captives that are maybe positive or negative based on another broker or some other process they went through, or a story from a friend. I mean, there's so much out there. It's kind of interesting. So can we, and this may be a simplistic analogy, but it's almost like a captive is, buying a car and you buy it in cash and you take really good care of that car. You detail it every week, and then you sell that car later for a nice profit or a good chunk of money. You get your money back, versus a lease where you just pay off every month for that lease no matter what. And then at the end of 3 years, they just come and take the car back. And that's that. I mean, it's a very overly simplistic analogy, but is it similar in some ways in that regard?
I would say it is. I mean, because at the end of the day, right, every year, whether or not your broker's doing it, they're shopping your policies, right? They're going to market on your behalf.
Yeah.
When you're in a captive, one of the most beautiful parts is you're not doing that anymore. You own the car. The car's yours. So now, we flattened these expenses out. We have no reason to expect significant increases. It's just a whole different game. You own the car. So I think it's a pretty great analogy, honestly.
All right. Thanks. Do you guys see companies that go into captives improve their safety record post captive? Is there data or anything that you guys, maybe it isn't even like clear statistics we can point to, but do you guys feel like companies improve safety records after post captive entry?
Nick, you want to take that one?
Yeah, Nick, I'll let you stick your neck out there.
I think I think the answer is it's kind of it's a yes, but it's also a yes before they enter the captive, because
captive
prior
ready,
to,
like Christian was saying.
correct, you need to have a safety manager. You need to have, you have to, otherwise, let's be real, you're getting invited into these captives, right? So the other members that are in there's a board. If you're not, if they look at your losses and they're like, oh my God, this guy's got, substantial losses year over year, you're not going to get in. Why? Because you're going to be pulling money that they put in. So, remember,
right.
it's that pooling of the risk. So yes. And I think once you're in that and you're with some other successful, you're in that captive with, your peers, successful business owners, you're not going to want to, for lack of a better term, you don't want to pimp them, right? You don't want to be like, hey, I can't believe we got into this. And now we're just, hey, Johnny, he's going to take care of that, that bill for me. You really, it's really being captive ready on the front end. And really instilling a lot of these, processes on the front end. And, that's going to lower all the big risks. So yes.
Yeah. And Justin, just to expand on a little bit.
Yeah.
Nick nailed it from a captive ready perspective, right? Like the goal would be in that time span between that 3 to 5, until we're at a point where the premiums justify the jump to the captive. That's one of our jobs as the broker, right? The whole, what we refer to as RMS, it's risk mitigation services, right? What claims are happening common? Is it, slips and falls? Is it car accidents, right? Let's say it is car accidents. What specifically? Are we not at fault ever? I doubt it. There's probably some at fault things. Are we following too closely? What are things we can do to help, trainings we can put our employees through? So that's step one. But I will say, I do think not necessarily that the claims go down after a captive, but the cost of said claims does come down tremendously, because the handling within a captive is so different, because a carrier has a vested interest in making the problem go away, right?
Right.
At the end of the day, they're able to write off whatever that reserve is set at. So let's say we're getting close to the end of a calendar year. They set the reserve on an accident at $1 million. It settles out to 500,000. They wrote off that $1 million the year before. So they have a vested interest in saying it's going to cost this much, which messes up your renewal, because now you're going into that renewal with a $1 million reserve hanging over your head. It ends up getting settled for 250,000. I'm already paying more in insurance. With the captive, those reserves are much more realistic. You also have the ability to fight claims in a very different way, utilizing your own attorneys if you want to, or the attorneys that are already within the captive. But the ability to really hone in on these things is very, very different, down to using private investigators to maybe, curb a work comp industry. Like if somebody's saying they hurt their back, right? Lifting something too heavy, and then all of a sudden we have footage of this guy slinging 50-pound bags of dog food around his, house like it's nothing. These are things that a carrier will do, absolutely. But again, they have less of a vested interest than a captive would, because of that risk pool sharing between you and the other captive members. So I think that it's safe to say that while we couldn't necessarily draw a firm thing and say, yeah, you're going to have less claims, I do think we can definitively say the cost of those claims is going to dramatically fall. So,
yeah, they're fundamentally handled differently in the captive.
Exactly.
And I would say from our experience, issues happen as you scale. The faster you grow, the more issues you're going to have. It's just kind of like, there's a direct correlation between I believe your rate of growth and the amount of accidents you have in a company. I mean, if you're growing at 5% a year and you're really just like increasing your clients and you have no new employees and everything's easy, you're probably going to be a fairly safe company. But when you're growing 40, 50, 60% year over year, you're going from 3 million to 6 million to 10 million to 15 million. We did that over the course of a few years. And I'll tell you, like, people get in a hurry. New employees come in that aren't properly vetted. And then all of a sudden you see, some data comes out about this person. This is like their fourth company in 6 months, and it's their, fourth workers' comp injury on their back too. And you're just like, wow, okay. There's an issue here. So
absolutely,
you're a bit handcuffed after these issues, after these accidents, with your standard insurance policy on how those are dealt with. Like you guys are saying, I mean, we've been so frustrated because we have information that we've seen and we're like, guys, no, this guy's not hurt yet. There's only so much you can do because those underwriters just want to kind of like wash their hands of it, settle it out, and move on to the next one. And it's
and they know that, it's cheaper to just ink a check than to go into litigation because, it's no secret lawyer fees aren't getting cheaper. Right. So, and I think where we really just, kind of tried to harness this with the whole alternative risk structure is, we're tired of having, we're tired of our clients coming to us and being like, man, I haven't had an auto claim in the last 2 years. Why is my auto going up by 20%? This is crazy. And it's like, well, we had a massive hurricane here a few years ago. The carriers are still trying to, become solvent. The ones that, were fortunate to stay down here. And I'm like, hey, guess what? There was some fires in California. We're going to feel it, right? We're going to feel it over here because, Christian mentioned on it earlier, insurance is a global issue, right? So, we're feeling, and that's the education. So, where we're instead of us just saying, well, it's the market and because of this, we're like, you know what, let's position you. Let's really position you for, okay, you are growing. What, regardless of the rate of growth, you're growing nonetheless. So let's position you to make sure that your risk structure, all this is buttoned up on the front end so that when it's time, we can enter into this captive. Or, another thing, I'm sure, you're familiar with it, Justin, and we hear about it all the time is the, the private equities, right? So say that, say a landscape owner, he's been doing this for the last 35 years. He's ready to hang it up, right? So he's looking for a sale. He doesn't just want to close it, right? Because what's the point of that? He wants to get his payday. So, so when that's the situation too, what we're trying to do is let's get you ready for the sale. Let's make sure, because private equity captives, they're all looking for what's the risk? What is this risk? How, are they just hemorrhaging on auto? Do they have, slip and falls? Do they have deaths every year? If they do, we're not interested in that. Why would we spend money for something that's a lemon? Right. So, that's really what we've been focusing on the past, couple 2.5 years is how do we take these clients? How do we educate them? Right. How do we educate them? How do we harness them with the right process for growth, and then to get them to a point where they have that decision to make. Do I want the payday, or do I want to continue to grow this and make money with my money? Do I want insurance to make me money? And that's, so we'll pivot them to, that captive that we're talking about.
And that's kind of what, when you're saying make money on your money and turning your insurance into almost like a profit center, you're referencing being a super safe company in a great captive is a way to kind of flip the script and actually start to get money back out of your spend.
Without question, we've got we've got one of our clients. They're a very large landscaper in Florida, and for years they've had some claims, right? And it's been a long road to get them to reduce the claims. I mean, we're talking some years where they'd, to the point where their auto deductible was over $1 million. That was
gosh.
the only way they were going to be able to be insured, was having
Yeah.
$1 million deductible. Right. So, to the point where they've been in this captive for a year and a half, they're set to get about $2.5 million back on their first dividend, their first payday. So, and obviously that's all predicated based on, the risk and the reduction of claims. But that's what we're here to do, right? That's what we do, is we're trying to make, the risk structure, or eliminate risk, and build, the processes and put those in place to really make it, a profit center for them. So that's what I mean by that.
Yeah, I man, it's like, if you're gonna spend, I think everyone listening wants to be a safer company. No matter how safe you are, you always want to be safer. You can never be too safe. And so it's like, if you're gonna go to that effort, work with, I would say, more like experts or consultants like you guys. I don't even think of you guys as brokers. It's more of like, if you're gonna work with experts in the field, like Nick and Christian, like you guys, like, why not earn a little bit on all that work you're doing, right? If you're going to be a safe company, You're going to improve all this, and you're going to be held to the global standard versus a small boutique standard. It just seems like that starts to make a lot of sense. Now, I want to ask Christian a little bit on this as we talk about insurance as a percentage of revenue and that big cost on our P&L. We start to get that down. Coming from business development world and landscaping, obviously price is a huge driver of decision making in our industry.
Of course.
And same with insurance. But how important is it to have a company that can be cost competitive at scale in large markets like Florida and California and Texas markets? Like, from your personal experience of pricing everything, give me a little bit of a take on that.
Yeah. So, I mean, it's incredibly important is the short answer. I mean, no matter, I have a perfect example. Okay. So not far from where I live, there's a large scale CDD, right? So community development district, similar to a larger HOA, except a CDD is ran like a government entity. They're extremely popular in Florida. I don't know how popular they are in the rest of the country, but here it's a major way that developers build master planned community. So for this specific example, ballpark $1.5 million contract, right?
Yeah. Nice.
I've had the pleasure of managing that job. I've had the pleasure of selling that job. I've done all of the above at different companies, mind you. So I've gotten to see this from two different angles. And no matter how badly someone wants to work with you, it's impossible to defeat the wallet, right? It remains undefeated. So you have to be able to compete. Now, with that being said, I do genuinely believe that there are the intangibles, right? The culture, the people. I think there's something to be said too about just like regional firms that have that local presence, that local feel, ownership that's involved. I think things like that absolutely will tip the scales in your favor. But at the end of the day, right, you still have to be able to fall within someone's budget. Like, I want a $20 million house on the water. I don't have a $20 million house on the water, right? I can't afford it. Maybe one day, but it's just, at the end of the day, right? You still have to live within your means. So I think that budget, cost, I think it's always going to trump at the end of the day. But I do think that there's always a margin there, right? Like, there's always a margin. So you have to be able to prove to somebody that cost benefit analysis, we are worth it, as a landscaping firm that you want to partner with, right? You've rolled through the big boys over the last decade, right? You've worked with all of them. For some reason, you fired all of them. Yep. So reasonable assumption here that why are we, reusing and recycling? Like, we need to get some new blood in here. And yeah, I know what it takes to do this job successfully. So here you go. And I think the number one way of doing that too is when you're in that business development role, I think the biggest thing that you can bring to the table that is a game changer is an actual action plan. It takes a lot of time. There's a lot of involvement from operations. I'm not saying that every sales guy necessarily feels comfortable doing that. Obviously, you're kind of at the mercy of having that buy-in from your operations team. But if you're able to come up with a true action plan for any property, whether it's a $1.5 million maintenance contract or whether it's a construction job that's, a $200,000 renovation in someone's backyard,
Yeah.
renderings, detail maps, section maps for the guys, right? Down to even the basics, man. You know how much people love to know where the truck's going to be parked?
Yeah.
Where are you guys going to park? Like Mondays, we're going to operate out of this clubhouse. Tuesdays, we're going to operate out of the Palmetto Club. Thursdays, we're going to operate out of here. Like they know where to expect your people. They know where you're going to be, uniforms, right? All of our people are going to be in uniforms. All of our people are going to be wearing safety vests. You will see them. Neighborhoods are busy, right? Like especially the older established ones.
Oh yeah.
The demographic continues to age with us, So that being said, like having those safety vests rolling around, it's just anything you can do. The more information's power. So I think if you're able to really carve out that niche for yourself of developing those action plans and coming in with a good presentation, operational buy-in, if you can have somebody from operations come with you to a presentation, I think knowledge is your biggest counteract to that cost aspect. You don't have to be the cheapest to win. Hell, I'll be honest, like I don't want to be the cheapest.
No,
I never want to be the cheapest.
Like kind of in the middle pack, right?
That's it. That's what it is. It's like, take the most expensive one, throw it out. Take the cheapest one and throw it out. Right. Let's look at the ones like that kind of fit that mold. Variants of that 10, 15%. Obviously, the bulk of people, like we know this is what it's going to take. So I don't know if that answers the question, but that's my take on it.
It's great advice. I mean, I think everybody is talking about organic growth right now because even private equity and those guys who are well backed and buying up companies every month, it seems like every week, maybe I see a new headline. Like they still need to grow organically. And those who can grow 30, 40% organically in recurring services win their market and they win the multiple race. So yeah, Christian, to that point, just all those things you hit on are so key. And it's like, if you can set up, I'm going to tie this back to insurance now. If you can set up your team to have a price competitive margin because your overhead is a little bit lower than the competitor because you're working on a more, long-term strategy with your risk management program and your cost structure. Like Christian Haviland was on our podcast a couple weeks ago, and his trade secret was be the lowest cost provider. And he said, do not be the lowest price, but if you can deliver services per hour, fully marked up and burdened at a lower rate than your competitors because of operational efficiency, you're getting things done faster, and you have, I don't want to say cheaper insurance, more cost-effective insurance comparatively, then you can start to actually win jobs with better profit margins and be that, like Christian, you're saying, be that middle market player where you're 5 to 10% higher than the low bid and you're right in there a little bit under that high bid. You can live and you can make a nice living there. I think too many people overlook their cost structure and just go straight to labor rates and efficiency. And that's the only two levers they pull. You can only pay people so low until you're just not going to get any good people to work for you. We talked about labor issues, pre-recording. We'll get into that at some point. And then you can only mark up so much on that. So, Nick, I want to bring you in here a little bit more. I mean, based on what you're talking with landscapers, the trends, you guys are you guys are out to conferences and you're on the road. Nick, what are you seeing in terms of industry trends that are really, really moving the needle right now in the landscape industry? I mean, obviously there's immigration and labor, but if those are the ones, hit on them. If you're seeing other things, I'd love to just kind of open this up a little bit.
I think a big trend, especially down here, right? And I'm sure it's not all that dissimilar to California and Texas. I'm trying to think of like the big hubs for landscapers. Is down here, I'm sure you've seen it when you've been down here. I mean, everywhere you go, it's community. It's all these HOAs, right? So a big push, and we talked about this a couple months ago, was a big push for the going green, right? Going electric instead of, because now down here we're dealing with heat, we're dealing with, everyday rainstorms, and hopefully, knock on wood, we don't have any of those, those big hurricanes this year. A lot of these HOAs, they've got noise ordinances until a certain time, and then after a certain time, and so a big trend has been, and I know on the front end it's a little bit more expensive, or much more expensive, to go electric, or battery power, whatever. But in the at the end, you're able to, especially in the summertime down here, you can piece out your teams to different times throughout the day,
Yeah.
and you're not making any noise when you're out there either. So,
Start so much earlier.
Mrs. Haverkamp in the house, down the street, she's not going to be after you because she's trying to watch Murder She Wrote, or her afternoon soaps, and you're out here mowing the lawn, right? So yeah, that's been a big trend down here for sure. That's something that I see a lot, which, tying it into insurance, we got to make sure that their inland marine or their equipment schedules up to date, because it's a big spend.
Do you see people as they go and they purchase new equipment and kind of revamp their fleet, and instead of a 2 to 3 year depreciation schedule, they're buying way more, but it's like a 6-year depreciation schedule. So the total equipment on a trailer maybe doubles in cost, or value, let's say. Are you seeing companies underinsured out there as you guys are going around doing your analysis of opportunity and prospects? It's like
No, never see underinsured. Yeah,
landscaping.
Unfortunately, it's, and we get it, right? We get it.
Yeah.
We understand why, instead of, $1 million limits, at least on the auto, it's $500,000, or, things like this, or, to save a buck, and we get it. So, that's where, for Christian, that's why we're trying to take our show on the road as much as we are, because we're trying to educate. We're trying to be that, that sounding board to to just kind of explain. And hey, look, I understand that an extra, few $1,000s to have the right coverage, that might be a burden now, but let's look at it from a different lens. What happens if we don't? What happens if we don't, and there's a claim? And now instead of me being like, darn, that's an extra few $1,000s a year, now I don't have a company. Right. And that's, and we see it. We see it. Unfortunately, we see it all too often. So, and it's hard to educate business owners by saying, hey, you need to spend more money. But, we're conscientious about how we kind of tiptoe around that subject, but it is important. I mean, we're seeing it a lot. I mean, Florida, specifically, it's the most litigious state in the country, and we got the Morgan and Morgans, every corner, and
the billboards out there are crazy. Like,
yeah,
nuts, dude.
I can't go 5 minutes in Florida.
Yeah. So it's I think Christian mentioned it earlier. An auto claim, if there's not $1 million reserve on it right away, like, it's gonna be there. So it's so vital to make sure that as you're growing, your insurance is as well.
And Justin, expand a little bit on kind of, one of your questions that you were talking about, like pre-pod when we were discussing, and me and Nick back and forth this a little bit before, was, question for the audience is your insurance program tailored towards where your company is going or where it's been, right? So,
yeah.
And shout out to Nick, because Nick, honestly, we went back and forth on how we're going to do that. He came up with that wording. I was like, that is absolutely masterful. So point in saying that is that the equipment, back to that for a split second, so many companies, their equipment floaters or their inland marine policy, which is what covers your equipment, is written not at replacement cost, but actual cash value. So if we are not, as the broker, on top of continuing to update that list on an annual basis, right? Key part, the depreciation that we were talking about, but much less just making sure that the equipment list is accurate, right?
Oh,
you're
that's a
buying
huge
stuff
challenge.
all year long. It is. It's very, especially the bigger you get. You might not notice there might be a $25,000 mower that got missed, right? One mower out of hundreds. Like, it happens, right? Guy dunks it into a pond. That was a $30,000 mower that's
And
uninsured. It happens all the time. So it's just, when I look at it, it's so much of just having that conversation. And again, there's always conversation about cost, right? We may elect to write that policy at actual cash value because, quite frankly, that is what the client wants to do. It's what they're able to afford. It makes the most sense for them financially. But it's our job to make sure that they're aware of it, right? We need to educate you so that you can make educated decisions. We're not going to tell you what to do with your business. At the end of the day,
100%.
my job is to make sure that you understand the way this is going to respond in the event of something happening, and you make the decision to move forward. So, I mean, it's so difficult to get owners to think about the minute details in insurance because it's the last thing on their radar, man. Like, yeah, I'm from an insurance standpoint, their main concern is, am I properly insured to go out there and secure the contracts that I'm trying to secure, right? So, yep, we carry the $1 million in auto. Yep, we carry whatever the necessary umbrella is. We got $1 million in comp. They're not worried nearly as much about the things that impact their bottom line directly from a what they own standpoint. You know what I mean? That's lower on the totem pole. It's just, I need to make sure that from a risk standpoint, we carry what we need to do work with these larger contractors, these large apartments, whatever it is. So it's just making sure that, you balance that and they understand that we got to be on top of it.
It is interesting how a lot of times, and you guys probably see this more than I do, but insurance policies and limits are created and written based on consumer demand in terms of like contractors, or you're working with a big property management firm and they want certain amounts, and like that's why we have the limits. It's not because we've actually looked at our business.
Yeah. Oh, I mean, dude, I had a client call me last week. Hey, I'm doing work with the new contractor. Oh, well, they require a $5 million umbrella. Can we get it bumped up? It's like, yeah, no problem. Have you, do you want to have? Because again, my job is to come up with a solution, but at the same time, it's like, do you have time for a 5-minute phone call? Can we have a little bit more, conversation surrounding it, And most of the time, if you've developed a good enough relationship with your client, you can ask the pointed questions, right? What does this contract look like? What do you stand to make? Is this a one-off job?
Right.
Have you had conversations? Is this something that you're going to continue to do business with? Or are we about to spend $30,000-$40,000 extra dollars on a $5 million umbrella policy when in reality, you're completely covered, with the $2 million policy you have now, and to go out there and profit on this single job that you have no guarantee you're going to do anymore. You're looking at a 10% margin. Like, it's just, sometimes a lot of people aren't going to have that conversation with an owner, right? Their employees sure as hell aren't going to say it.
Nope.
So sometimes it's our job to ask the questions professionally, not pointed, but just, you make them think for a second. And then sometimes they're like, yeah, you know what? Let me go back and see if I can push back on this. And you'd be surprised how many times, if a company wants to work with you bad enough, they may be willing to renegotiate. You may be the only contractor out there that's not carrying a $5 million umbrella because you're the only one that had the stones to ask. Everybody else just does it.
Yeah. It's like it's boilerplate left over from the previous job that was 3 times as big.
That's exactly right.
You ask that question, they go, what do you mean $5 million? Oh, yeah. Just redline that.
Yep.
Like,
exactly.
That's a great point. Don't always just assume. Asking questions is fine. If anything, it shows that you're educated and you're actually paying attention. That's a great point. Well, one other thing I want to get you guys' take on, we were talking about the electrification and going all electric and what have you. I think there's a lot there, but also just in the technology side. I mean, with more and more technology into the space, are you guys seeing any sort of, AI powered benefits within the insurance realm? Like, everybody's on AI now, or not on, they're talking about AI, trying to implement it. Like, is there any benefits to you guys on the AI platform, or are you guys seeing anything that is going to help you guys analyze or improve your customization of the service?
Nick, you want to expand on that one first? I'll hop on just for a second. So, I mean, AI specifically, I think our biggest thing right now that we're seeing is from a service angle. I think there's huge ramifications for this industry wise, especially on the brokerage front. When we are looking at the way we review policies for mistakes, for questions, things like that. We're able to tailor AI to specifically look for all kinds of things, whether or not it's just making sure that the necessary verbiage is correct, whatever it may be. It has the capabilities to do that. So us really digging into that, and Baldwin Group is doing a great job of it right now. We're using it for our service colleagues. We're doing it for certificates. A lot of the times from a certificating standpoint, there's major questions and concerns with the way verbiage needs to read, and having AI backing that to where we get this double check, that isn't just whoever it is being, swamped and busy with all these things, having that AI double checking things before they're sent. And then it flags it saying, hey, we noticed that the address was wrong on this based on, the system that we're using. And it's like, oh, yep, please correct. And then it does it automatically and sends it out. It's just basic things like that, that saved everybody involved an hour, because what would have happened is we would have sent that certificate out. Most of the time, our client wouldn't have checked it. They just assume it's right. They send it out. Yep. Client reaches back out to them. They reach back out to us. It's, we've saved everybody. Yeah, we've saved everybody an hour of time just by flagging that an address was mistaken, and it caught it like that. So
yeah, I think it's an awesome way to use it as like a second set of eyes, kind of like run through that double check. So it's just interesting to see how it's being utilized in different businesses and different verticals. But overall, Christian, I want to get a last take here on the landscape side and just what. And I want to go to like trade secret here. So it doesn't have to be landscape related, but I feel like, I want to get your take on trade secret and just go there. What is your like one piece of advice or a trade secret that you'd share with the audience in all of your time in the green industry and what you're doing in insurance now too?
Yeah. I mean, mine's, it's probably in books. It's probably been written a million times, but for me, it goes back to my father-in-law. I lost him last year, actually August, and here it'll be a year in about 4 days.
Wow.
So I lost him last year, but one thing that he always really hammered into me professionally was under promise, over deliver. And it's the most basic concept in the world, right? When somebody says it to you and like you think about it for a second, you're just like, duh, like it doesn't get any easier than that, right? But like until he said that to me, I'm a people pleaser, right? That's just the way I've been my entire life. Somebody says jump and I'm going to say how high, but I have to be realistic with myself, with, my life. I have kids, so if I know definitively that I'm going to have this email back out by tomorrow, or, I'm going to review this document by tomorrow, right? That's what I'm going to say. And I'm probably going to give myself even a little cushion. If I know I'm going to get it out tomorrow morning, I'll say I have it to you before noon.
Smart.
My goal is to have it out by the end of the day. I'm trying to get it sent tonight.
Yeah.
It might be after hours, but when I'm sitting in bed with my wife and I'm sitting there on my iPad, just, doing some things like, I'm trying to beat my timeline by, 12 hours, but it's like, if I'm able to set that precedence and then I get it out, it's really hard. It's really hard to disappoint people. Clients are going to be constant like, man, this guy goes above and beyond. When in reality, I'm not putting myself in a bind by setting this unrealistic expectation. So that would be my trade secret.
It's great advice. And it's great advice in all industries, specifically landscaping, where business developers, that's kind of my background. And it's like, we want to promise everything. We're going to do the best job. It's like, I often say like, hey, I can't say we're going to be the best landscapers out here, because there's some amazing landscape team members, technicians that hopefully will work with us one day, that work in this area. Like we see a partnership in the future. But one thing I can say we'll do really good on is like communication and quality control follow-up if there are issues. But, when you under promise and you actually become vulnerable to the client, you're now becoming human. And I think sometimes, we put on this facade that's like so over the top. The clients are like, there's no freaking, like, I've never met a guy in my life who has had all these areas of perfection. And I think when we do that and then over deliver on that, we just gain so much credibility as team 100%. Members.
Yeah. And I mean, the big thing too is when I'm looking at just situations in general, but specifically when I think back to my business development days within landscape, you know, I think being able to look a prospect, a potential client in the eye and say, you know, what makes me different isn't that we're not going to make mistakes, right? Things are going to go wrong, right?
Yeah.
Property's not going to be perfect all the time. You know, there's going to be weed pressure in the summer. There's going to be things, but it's how we react. It's how we communicate. It's how we take care of you as a client. So when you tell me that there's a problem, I'm going to pick up the phone. We are going to be there in person. I will send additional people to help. Like, it's that open line of communication, especially when you're C-suite or, you know, just in management in general, where you're responsible for the team. It's you being able to say that to the client as the leader, right?
Yes.
As the person being able to sit there and say, my team has the resources that they need. We are not perfect, but we own our mistakes and we're going to make it right. And I think when they hear that from the right person, you know, especially if you're able to do that, you know, even on that used to be my number one priority during we used to call it a new client orientation, right? And, you know, we'd have our branch manager out there, our owner would be there if he could. I would always be there, account management, all the way down to the production managers. And, you know, whoever the most senior person is there kind of takes that, like, you know, grandfatherly role of just like, hey, you know, I'm here. Like,
Yeah.
you know, you might not see me every week, but I'm here because I want you to show how important you guys are to me, how important your business is. And I want to make sure that you understand that we own our mistakes. Anything that happens, we will take care of. You know, this, you're a priority for us. And I think it goes a long way. Just, you know, and a lot of times, man, it's hard for people to get as mad at a friend, you know. So the more you can kind of humanize
true.
that relationship, you know, and get close with your clients and build that relationship and that trust, you know, instead of them calling you and reaming you out, they're going to call you and tell you that there's a problem, but they have some faith, they have some confidence it's going to get taken care of. So it's a completely different conversation than someone that they have no relationship with, someone that they don't have that confidence and that faith in to be able to make it right. So it's just a priority.
And even worse too, I've seen there's no communication. They just go out to bid, you know?
Oh yeah.
And you're like,
yeah.
why are you going out to bid? And they're just kind of rolling their eyes because they've had this huge growing list that you don't even know about.
Yep. Oh yeah.
Well, Christian, we lost Nick a few minutes ago. His internet cut out.
We did, yeah.
And dude, like absolute professional as you are, you continue to go. Oh my gosh! As soon as I say that, Nick's back.
There we go. He's back.
Yeah.
Did someone say professional?
Dude, that's so great. You entered the frame at perfect timing. Oh man,
perfect timing.
I was just commending Christian on his ability to just keep ripping through this trade secret and stuff as you had to reload your internet. But Nick, welcome back to the podcast.
Thank you. Must be the afternoon storms.
It's got to be something. I got Starlink in my house. Have you guys messed with that yet?
No, but
we have it up in Alabama for our hunting camp. We have it.
Oh, it's so nice, man. It is. Nice.
It's incredible.
Thanks, Elon.
Nick. Yeah. Well, let's see if we get, now that we got you back, man, I'm going to toss the football to you. And prepared or not, I'm asking for your trade secret. And this is always the end of the show where we get the nitty gritty. What can you learn from your experience? What can we learn from your experience? And what do you want to share with our audience?
Yeah, I think the big thing, Christian kind of, touched on it earlier is, and as did I, is, making sure that regardless of your business, regardless of what your industry is, making sure that as you grow, that your insurance grows, because I'm seeing it, we see it every day where, they've grown, but, nothing else has grown, right? Their insurance has stayed kind of stagnant. And because of that, we use it, we say it often, but you're one mistake away, and it doesn't even have to be you, right? It could be someone sees a K&D sign on the side of a car and they're like, ooh, fresh meat. I'm ready, right?
Yeah,
let me get a payday. So it's just making sure that as you continue to grow, that your insurance is growing with you. That to me, that's the big one.
Yeah. Gosh, I love that because we never see the headlines of the guys who don't make it. the guys who go bankrupt, the guys who go belly up because of some crazy incident that was so far out of their control. They got pulled into it, underinsured, underprepared. And look, guys, we don't want to see anyone go down like that. Look, if you're going to go down, you got to go down fighting. And that's not a fair fight. So, Nick, Christian, thank you guys so much for all the insights. I knew this was going to be a dynamic, fun podcast. Last question for you guys. People listening to this want to talk to some professionals. How do we get a hold of you guys? What's the best way to get a hold of you guys?
Yeah, go for it.
Justin, am I allowed to give my cell phone?
Dude, anything you want to give me, we'll take, brother.
Yeah, of course. Yeah. So guys, my cell is 813-390-8467. Got my phone on me 24 hours a day. My sleep hygiene is absolutely terrible. So usually I'm up till 2 and I wake up at 5:30, and that's me sleeping in, by the way. So feel free to reach out to me at any time. And then my email address is christian.padgett, CHRISTIAN.PADGETT @baldwin.com. Available via either one anytime. Would love to chat. So.
Awesome. And guys, for everybody driving, don't panic. We will put this in the show notes.
There we go. Yeah.
Nick, how about you? Got an email we can hit you at, Nick?
Yeah, sure. It's Nick, NICK, .Knight, KNIGHT, @baldwin.com.
Awesome. And I'll put both of those in the notes for you guys. And yeah, you guys, thanks so much for coming on. What a fun conversation. We covered so many different topics. And I think my biggest takeaway from today is if you guys are 3 million and you have a goal of getting to anything beyond 5 in the next 5 years, give these guys a call, give them a call and have that captive, that alternative insurance conversation at minimum. And then also make sure you're like checked up. I mean, do you guys kind of do that? Is like if someone reaches out, would you give them a like, what's your process? I guess maybe I should ask that question. Like someone reaches out, they're 3 million, they're wanting to be 10 million in a few years. What
Hit them with the trademark name, Nick. What's the trademark name?
You say it.
All right. So we do a thing called a risk map. So yeah, it's a full in-depth audit of all of your insurance program, as thorough as the information that you're willing to provide us. So, we'll scrub, old loss runs and claims history. We will put as much into it as you are willing to put into it. So quite frankly, the depth that we're willing to go is however much information you're willing to give us. But at a minimum, if we can get full policy documents, we'll dig through everything, have some conversations about what the operations look like, and make sure that everything's on the up and up, and anything that isn't, we'll be reporting back. So.
And Justin, to answer that, after we were in a landscape show in Atlanta-ish, kind of right after the first of the year, and we noticed that there was a lot of those younger, hungry landscape owners, right? Kind of that even
Absolutely.
800,000 to a couple $1 million, right? Really just kind of infancy stages. They just graduated from, throwing it on their back and riding their bike, right? From house to house. What we do with those is, we have quarterly check-ins. We connect with them, and it's like, all right, hey, we just had one, I think a week and a half ago, with someone from that conference, and he's doubled his revenue in a year, and he's still a little bit small right now, and the program that he's got for him is fine, but we check in, we have a 45-minute Zoom call with him, and we go through all the policies. Okay, what are we anticipating? And just kind of answer some of those questions that he has. It's we're not selling insurance. We're providing education, and that's really what we want to do. Is we want to be able to we're in a position to be able to put the armor on the shoulder and help navigate business owners through tough times and through uncertainty, right? And that's what we do. And with Christian, with his background, I mean, he'll do business development. He'll go to, he does it quite a bit with some of our clients, where he'll he'll meet with them and he'll have a 2-3 hour meeting and kind of talk about, business development. Here's what I did, and here's some templates that I have, and really trying to navigate. So it goes far beyond just your a transactional insurance advisor, right? It's we want you to be successful, and it's no secret. The more successful you are, the more successful we are. So we want to help navigate you, right? Yeah. And that's that's what we're here for. So no company's too small. We'll absolutely have a conversation and give you some direction. But yeah, so again, it's not transactional insurance, but education.
That's huge. I think I think landscapers in general, and even just all service industries, like, we're so focused on the day-to-day and getting the job done and getting our crews paid and, getting our clients to pay us. These conversations, that's a big one. These conversations tend to get pushed to the bottom of the pile. But what you guys are offering, I just want to highlight this, what you guys are offering in these quarterly check-ins and to any size company is so much more valuable than even the insurance that you guys provide. Like, yeah, you can save some money on insurance, get into a captive, but look, I've had conversations with certain people, and I can name a bunch of names. I'm not going to, but I've had conversations with very influential people in this industry, and one dinner conversation, one lunch conversation has changed the trajectory of my career and our company's growth path. Because I went into that lunch thinking my plan is rock solid, and I left that lunch thinking I am thinking way too small. And I went and created a new division or built out a new BHAG. Like, it truly is amazing when you can surround yourself with people who are outside looking into your business. They can see things that we cannot see. So at the very minimum, a conversation with you guys on business, regardless of the insurance stuff, is that's the incredible value I think you guys are providing. The education, the support, the back and forth. I mean, kudos to you guys. Hats off to what you guys are doing. I really appreciate that. It's raising the bar in the landscape industry. I think that's why we get along so well, because we're both kind of focused on that same thing. Let's make this industry great. Let's do it.
Yep.
Exactly. Guys, that's
Speaking of that, just so you guys know too.
Take us home, Christian.
August 22nd, 10:30 a.m. At the Orange County Convention Center. We have the Florida Nursery Growers and Landscape Association does their big trade show every year. It's called the Landscape Show. We'll be doing a presentation on alternative risk structures on the main stage, 10:30 to 11:30. So if you happen to find yourself in Orlando on the 22nd, feel free to come through. We'll be there, and we're excited to talk to some people. So
awesome. This will be dropping. I think August 13th, guys. I think I'll get this out August 13th. There we go. So a week from tomorrow, basically, if you're listening to this in real time, on Friday, I guess that'll be August 22nd. You guys are going to be in Orange County. And what's the name of the show again?
It's called the Landscape Show. It's FNGLA's biggest trade show of the year. So it's right over there at the Orange County Convention Center. Yeah.
Awesome. Well, awesome, guys. Looking forward to that, and great conversation today. Thank you guys so much for coming on. Appreciate you guys' time.
Thanks for tuning in to Trades Talk, where the next generation of disruptors comes to raise the bar. If you got value from today's episode, share it with someone in the trades who's ready to level up. For more tools, insights, and community, follow host Justin White and join the movement at jwhitegroup.com.